Wait a couple seconds for the live to kick in. If you're joining, appreciate you. Today we're going to be examining a high yield dividend stock. Says we're live, but I don't see that we're live. There we are. All right. Welcome back to Financial Times with Ted. This is Escaping the Rat Race. Retire comfortably, if not early. So again, this is not financial advice. I am not a financial advisor. I am not your financial advisor. This is just information that I have pulled off the lovely interwebs, but I have over 20 years in the banking industry. This is through personal experience. I was able to leave the banking industry at age 46 and am now doing my own thing to where I can partake and give advice to you in terms of personal advice, not financial advice. This is just public knowledge. But we're going to be examining YSPY today. YSPY is a stock that is a high yield dividend. They sell covered calls. So if you don't know what a covered call is, it's where a company will take a fund and buy puts and calls on a stock. And then under that ticker, for here, for instance, it's YSPY, they end up paying a large portion of the proceeds to dividends. Just keep in mind these dividend funds can be a little riskier because they do have high expense ratios because they do pay out a good majority of their winnings, their earnings to dividends. So unfortunately, that does take an impact on a lot of these stocks' overall price. So if you are buying and holding these, just be prepared for what they call NAV erosion, where these stocks can drop a little bit in value, but you still will receive a monthly or weekly dividend. This stock is a weekly dividend. This one will pay you every week, and it pays every Tuesday. It announces every Thursday. So every Thursday morning, you can go, you can look it up, see exactly what this stock is paying for the week, and you can buy and hold or buy and sell the next day. You do have to hold until open of the market on Friday in order to qualify for the dividend payment on Tuesday. But let's look into it. Lou, you can make $50 a month on this bad boy. It's a 50% annual yield. It's $14.75. And in order to make $50 a month, you would have to invest $1,316.96, or roughly 90 shares. So, with that being said, this stock itself is based on the S&P 500. So, with that being said, you typically know what the S&P 500 does every year, and if you don't, it's pretty much the average over the last 25, 30, 40 years. The S&P 500 has gained anywhere between 8 and 12% on average. Now, there have been some years where you lose money, and there's some years where you gain more than 8%. However, this is a factor to where you're putting money into a high yield covered call, paying 50% annual on the stock price that you're purchasing in terms of dividends. So keep that in mind. So this is a this is a good way to build wealth pretty quick. Again, don't put all your eggs in one basket. Don't go, if you got 50 grand to invest, don't dump 50 grand into YSPY, but we see what it takes to make $50 a month. Maybe go and make $100 a month and spread it out over a multitude of stocks. Go into real estate funds, go into high yield funds, go into S&P 500, blue chip stocks that pay dividends. There's a multitude of those out there. But, keep in mind, they're not going to pay 50% annual yields. Your blue chip stocks, think about like NVIDIA, Apple. Those are two stocks that pay dividends, but they're below, I believe they're below 2%, might even be below 1.5%. Don't quote me on that. Look it up. So going forward, this is definitely one that, I have this in my Roth IRA personally. I also have 250 shares in my brokerage account. So, it gets me a good little boost every month, and I take that money and I reinvest it into something else. So that's YSPY for the day. I hope everyone has a great holiday coming up, Easter weekend, 3-day weekend. The market is closed tomorrow. So if you want any advice or tips to open up a brokerage or a Roth IRA, what are the benefits, check out my other videos. I break it down, Financial Times in the Car Line. I break down a multitude of financial topics that I was not able to discuss while working for the bank for that 20 plus years. And then check out this series. My live series is Escaping the Rat Race. Retire comfortably, if not early, through dividend investing. And by all means, if you have any questions, put them in the comments below. And have a great weekend. Financial Times with Ted. We're out.